Hey, soldiers, Tai Lopez. You might know him. He had a pretty ubiquitous presence on YouTube. He was advertising big time at one point. Couldn't get away from his ads. And he has a tremendous social media following. In any event, Tai Lopez's companies could be facing bankruptcy, and they could also be facing some questions from federal regulators. We're going to get into this. Now, for those of you who may not be aware, Tai Lopez, like I said, very ubiquitous in terms of advertising on the YouTube platform, especially. That's where I would see him. He bills himself as a motivational speaker and also a businessman. He had this idea a few years ago to purchase legacy brands, purchase the names of legacy brands that had ended their brick and mortar businesses, okay? Now, those brands are considered goodwill. Whenever you hear like a quarterly report of a company and they report or they say something about goodwill, the name of the company is a large part of their goodwill because it's the public-facing aspect of their brand. So, Tai Lopez's company purchased legacy brands like Radio Shack, Pier 1, Models, and others. We'll get into the others in a moment. With the idea that, okay, their brick and mortar locations are shut down, but I'm going to buy the names, and then I'm going to start offering the services or services through the web. Okay, so you'll have, instead of walking into a Radio Shack, you have RadioShack.com, and we will offer services through that. Now, my issue here is that Radio Shack was a big name brand in the 20th century, latter half of the 20th century, as was Pier 1, Models, some of these other brands that he purchased. And once he explained what he was going to do, I was skeptical about whether those brands had the wherewithal to compete in an environment with Alibaba, Temu, Amazon, okay? And all of the other like big online retailers with an infrastructure set up to get things to your home with little to no shipping, okay? Get it there quickly, all right? So I just thought that their time had come and it had gone. Like Sears, for example. Sears used to be the Amazon of, America. But instead of going online and purchasing things, you could purchase homes from the Sears catalog way back in the day. Okay, this is even predates me by a long shot. But that Sears catalog was thick and it had everything you ever wanted in there. So Tai Lopez went out, he purchased these brands, and he created websites for these brands. Now it looks like they're running into some financial trouble here. Owner of Radio Shack, Pier 1, and Models is in danger of bankruptcy filing, sources say. So unfortunately, I think the chickens have come home to roost with regard to the realization that the time, that the day in the sun for these brands have come and gone. We're living in a different world now. We're going to examine this. And the reason why we're examining it, guys, is because when you're out there, I know some of you are probably qualified investors. Others are probably working their way up to that level. So you really need to be, you need to be predilected to do a lot of due diligence before you jump into anything, okay? And if someone's putting something out there that sounds too good to be true, you need to have your antenna up. Now, at the same time, when you go out on those thin branches, okay, yeah, it gets risky out there, but that's also where the fruit is, right? So you got to balance things based on your situation. A flashy firm that scooped up a slew of bankrupt retail brands, including Radio Shack, Pier 1 Imports, and Model Sporting Goods, is now in danger of filing for bankruptcy itself, the Post has learned. Miami-based Retail ECommerce Ventures, whose CEO, Tai Lopez, is a self-help guru who lists Bill Gates and Mahatma Gandhi as inspirations and charges up to $1 million a year for coaching and consultant expertise, has spent $120 million to amass a portfolio of aging retail names that also include Dress Barn, Linens and Things, Stein Mart, and the Franklin Mint, according to a source with knowledge of the firm's finances. But lately, Lopez and his co-founder, Mr. Alex Murr, a former NASA scientist who helped orchestrate REV's acquisitions after selling his Zeus dating site in 2019 for $298 million, they are opening the books to their privately owned licensing company to prospective investors for a potential, quote, sale of all their assets, a bankruptcy filing, or Hail Mary financing, unquote, the sources say. Lopez and Murr are open to selling the assets. Good luck with that. Filing for bankruptcy or Hail Mary financing, which is, other investors coming in and saying, hey, we'll take a chance, see if we can turn this thing around. But there are problems. Okay, we'll get into those in a moment. The company's burning through cash, said one source with direct knowledge of the situation. REV's revenues and losses last year were both about $60 million. So they made $60 million and they spent $60 million. So it's a wash. They had about $150 million in sales in 2021. So sales are down. $150 million in 2021, $60 million in 2022. And in 2021, they had about $90 million in losses. Okay, so hooray. The losses are $30 million less in 2022 than they were in 2021. That's great. But the unfortunate part is the revenues are down $90 million. Okay, so this is a rough patch for sure. And look, I used to work at Radio Shack, okay, and I can tell you right now, Best Buy really took them out. Radio Shack's stores were very small compared to Best Buy, so we weren't selling the latest and greatest home computers and televisions and stuff like that, okay? I can remember, and I was at Radio Shack in the mid-1990s, and this is when cell phones first started to take off, right? But at that time, you needed to have like A1 stellar credit to have a cell phone. So when people would come into the store, we'd actually do their credit check, okay, and see if Bell Atlantic Mobile, this is the name of one of the companies, was going to allow them to have this cell phone. Mind you, it was like $1 a minute talk time. That's how much it cost, okay? I can remember friends holding my cell phone and, can I call my mom? And I'm like, hey, you better make it quick because that time adds up. So that's the landscape. And people would come in and rarely would someone pass muster of that credit check. And we had orders from on high. Well, if they can't get the cell phone, upsell them to a walkie-talkie, okay? Which was just hilarious then. It's absolutely crazy when you consider it now. The company, REV, has racked up about $200 million in debt. So they're not making any money, but they are racking up debt like nobody's business. Mayer and Lopez did not respond to multiple emails and calls for comment. This is according to the New York Post. On Thursday, the 2nd of March 2023, the Wall Street Journal reported that the company had hired law firm Kirkland and Ellis to explore restructuring options. It's a fancy word for bankruptcy. The company recently said it will pause payments on its debts, the Journal reported, citing a lawsuit filed by a vendor this week. Hey, what do you think the chances are of you calling your gas and electric company and saying, hey, listen, I had a bit of a rough patch. I'm going to go ahead and pause my payments on debt for now. But don't worry, when things start looking up again, I'll get back with you. I wouldn't recommend it because I think you're going to be sitting in a dark, cold house. A major red flag surfaced last month when discount retailer Tuesday Morning filed for Chapter 11, just months after Mer and Lopez paid $35 million for a controlling stake in the Dallas-based chain last September. Tuesday Morning, they have one of those not far from me. I really like it. It's like a grocery store, but they sell a lot of organic things. They sell this lime juice that I love. I drink like this concoction of like 25% just fresh lime juice and water. And they sell it in this glass bottle. I love it. So I hope they're not going out of business. But yeah, they're like a grocery store. Okay, that's what they are. They don't have as much as you might find in like a Wegmans or a Kroger's or, a Harris Teeter, but they're pretty cool. The realization that an investment they made less than a year ago is not worth what they put into it could have implications for them because they have investors, said Adam Stein-Sapir, portfolio manager of Pioneer Funding Group, whose focus is on distressed debt. So this guy's company comes along and they pick through the remains and they see if they can find anything of value, and then they start selling it off to make a buck. A lot of businesses do that and make a lot of money at it. It makes it more difficult for REV to raise more funding with investors who might be thinking, you guys just lit millions of dollars on fire. Yeah, I'll say. Lopez, who has 8 million followers on TikTok, Instagram, YouTube, Snapchat, and Facebook, has written self-help books, including his 67 Steps on How to Become Wealthy and Happy, that incorporate the teachings of powerful and famous people like Bill Gates, Charlie Munger, Peter Drucker, Gandhi, and his personal mentors. Lopez teamed up with Mer, an Iranian-born immigrant with a PhD from the University of Maryland, who worked, or let me go back because I know the pronunciation police are out there. From the University of Maryland. Okay, I'm from Maryland. We say Maryland. Mr. Mer worked in risk and safety management on NASA's space exploration missions. This is according to securities filings. At the height of the retail carnage in 2019, when nearly 10,000 stores went out of business. That's when these guys teamed up. Rev snapped up the rights to Chain's intellectual property, shedding the brick and mortar locations with a plan to run them as online-only business. And now, this was a big, this David and Goliath here when you think about the fact that whatever I can order off of Amazon, Linens and Things, even Tuesday Morning, okay, I can order food with Amazon. In fact, my lime juice, I might have to resort to Amazon for my lime juice if Tuesday Morning goes out of business. So models, all that stuff is in one place on Amazon. So this is a big get to go up against them with these legacy, some might say outdated brands. So they shelled out $20 million for the Pier 1 Imports name and intellectual property, $3.6 million for Models, and $6 million for Steinmart. Now, Steinmart is not in my area. Somebody knows what they do or did, or if you were a fan of them, let me know. They were a high-octane machine that grew very fast, said one brand licensing executive who met with the pair early during their rise. And yeah, Tai Lopez is high-octane. Lot of personality, okay, a lot of energy. Before buying Tuesday Morning, Rev raised capital through a series of investor webinars over Zoom and emails seeking accredited investors. Now, an accredited investor, that's an investor that's going to have a net worth of $1 million or more, not including their primary residence, and income over $200,000 if they're single, over $300,000 if they have a spouse or partner. And that is the definition of accredited investor that the Securities and Exchange Commission puts forth. Last July, now this is where they might have a problem. Last July, Mara sent clients an email with the come on, quote, me and Tai closed a huge deal to buy bodybuilding.com, a brand doing more than $100 million a year. Get on Tuesday's investor orientation call if you want more details on our deals that pay up to 25% a year in monthly payments. Okay. All right, 25% in monthly payments. That's handsome. Okay, might be too handsome to be reasonable, but so far we don't have any reports of investors complaining. So maybe they were getting that. 2 weeks after he sent that, Mr. Mayor sent another email. Quote, "Did you realize for every $300,000 invested, we will send you up to $60,000 a year?" Then another email on September 12th. Want to get in on Rev's private deal flow? We already paid out over $25 million to investors. In fine print, the emails also say that if you are not an accredited investor, you're not allowed to participate in the call or the deals. And they warn you could lose some or all of your money by participating in off-market deals. It's very upfront and true. Okay, you could win big, you could go bust. The promotional emails, though, appear to have stopped in November. Rev's methods for luring investors, in particular promising investors certain returns, could also land it in legal hot water, said David Tawil, president of ProChain Capital. Federal regulatory agencies, including the SEC, are very sensitive to retail investors being sold hard with guaranteed returns without any substantiation. Okay, so they could be, getting some questions asked from the SEC or other federal regulators. Meanwhile, a quick review of Rev's collection of retail sites signals trouble, industry sources note. Now, bare bones Modell site looks like it hasn't been updated in months. Football season is right around the corner. All right, now let's take a look at the Modell site. Let's see if it is outdated. Okay, we got some athletic gear here. Look here, it says sale expires in November. Okay, well, unless they mean November of 2023, that is definitely outdated. Other tabs on the Modell site promise licensed caps, jerseys, and sports regalia. Those are completely empty. The few available offerings include a smattering of barbecue grill covers, t-shirts, and wallets with random sports logos. This is crazy. The storied retailer's former CEO, Mitch Modell, fumed in an interview with the Post. They are not able to get regular merchandise and are selling stuff from 2021. It's all outdated. Modell claimed he was rebuffed by Lopez shortly after Rev scooped up the former Big Apple's mainstay brand for nearly $4 million. I was trying to protect my brand, but there was no interest. All right, so there you have it, guys. Look, you got to be kind of careful here. Very careful. Not kind of careful. Very careful. When we talk about investing in off-market deals, I'm sure Tai Lopez, put this together with the best of intentions. I'm sure it wasn't his intention to go out and lose money because that's damaging to your reputation, right? Speaking of Radio Shack, just because I used to work there, I will mention this. In 2021, they announced plans to rebrand century-old Radio Shack into a cryptocurrency exchange platform. And we all know, if you're a soldier of finance, you know that cryptocurrency exchanges have seen better days. Bad timing on that one, Tai Lopez. This week, there was no mention of crypto on the site. At the time of the article, it was still promoting Cyber Monday and offers an eclectic mix of products under new arrivals, including guitars, ukuleles, and toasters. When I was working there, we didn't offer any of that. Don Ho, didn't he have the ukulele? I'm dating myself. Last June, Radio Shack drew scorn when its Twitter account began using profane language and drug references, an apparent publicity stunt to draw attention to the fizzled crypto venture. Yeah, bad idea. All right, so a couple of these guys said they were out there buying off-brand merchandise and closeout stuff. Tractor trailer had an accident, spilled its load. This is the kind of stuff they're offering on the website. You can see here, who is this? We got a Nefertiti bust. I'm not so sure I would be featuring that in my home, but that's fine. Okay, to each his own. All right, guys. So that's about it. That's what's going on out there with old Tai Lopez. Okay, guys, check it out. Watch this report we did about how to double your money using the S&P 500. Now, the S&P 500 is under a lot of regulation, legit index. Okay, you don't have to worry about being an accredited investor to get in on this. Go ahead and watch the video and understand how to double your money using the S&P 500. Guys, I will talk to you soon.